The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. S&P 500 now down 24 points. But let's see what's going on in the markets and as a whole. So we're going to look at the 10-year Treasury, as we always do, down 1 basis point. Mortgage-backed securities are up 2 basis points, not really telling us a whole heck of a lot of anything. But OBMMI, they provide the most comprehensive, accurate, timely, and interactive analysis of pricing ever conducted in the mortgage industry, calculated from actual locked rates with consumers across 35% of all mortgage transactions nationwide. Where are the interest rates really? Well, 30-year conforming yesterday locked at 7.053. The jumbos locked at 6.708. FHA 6.862. USDA for the rural areas and generally no down payment, 6.923. And the best loan on the market for those that earned it. You cannot just apply. You have to have earned it. The 30-year VA loan, 6.727. Why are the markets behaving the way they're behaving right now? Well, because nothing matters until the Federal Reserve comes out and tells us that they're increasing interest rates on the Fed funds rate by 75 basis points. Question is, what are they going to do in December and January? That's going to be the big issue. We have heard earlier this month, the Fed mole, Nick Timiraos, said that the Fed will likely use today's meeting to prepare the markets for a 50 basis point hike in December, which could be the first sign that the Fed might be turning around. Amazing. Can you believe they're finally going to realize that there is inflation and that the markets are slowing, that people are stopping doing different things? But we did see the ADP report. We got more jobs in the leisure and hospitality sector. The ADP report showed 239,000 jobs created in the month of October, stronger than expected. There was a negative 16,000 revision in September, which tempered the optimism a little bit. They also reported that annual pay for job stayers increased 7.7% year over year, while job changers saw an average increase of 15.2%, down from 16.2 2 months ago. I think I might have to change jobs. Holy cow. For whatever reason, almost all the job gains came from leisure and hospitality from the Pacific region. Most other areas saw job losses. This means that there was a weak breadth of job gains, especially in the goods sector, which showed losses. Nella Richardson, chief economist at ADP, said that, quote, there's a really strong number given the maturity of the economic recovery, but the hiring was not broad-based. Goods producers, which are sensitive to interest rates, are pulling back and job changes are commanding smaller pay gains, while we're seeing early signs of Fed-driven demand destruction. Surprise, surprise. It's affecting only certain sectors of the labor market, unquote. We've been talking about that. We didn't need them to go to ADP to get that, but you can just come to Ron Siegel Radio and listen for that. That's the Mortgage Minute, brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990.